quite an interesting alternative to other popular indicators. The GMMA implements two different explanation moving average in the effort to analyze market behavior on multiple levels. The Guppy indicators is composed of the 12 EMAs, so essentially the Guppy and EMA are the same thing. Guppy will help you to isolate trades to stop opportunities that warm your price reserved. The multiple lines of the Guppy will help you to see the strength of the weakness of the trends, better than if only using one or two EMAs. The Guppy Multiple Moving Average is an indicator that tracks the activity of the two major groups of the market. These are the investors and the traders. Traders are always probing for the change of the trend. In the downtrend, they will take the trade in the anticipation of the new uptrend developing. If it doesn't develop, then they go out to the take trade quickly. If the trend goes to change, then they stay with the trade but continue to use the short-term management approach. No matter how long the uptrend remains in a place, the traders is always alert for the potential trading change. Often they use volatility based on the indicators or the short-term 10-day moving average to help identify the exit conditions. We track their activity by using the group of the short-term moving average. These are 3, 5, 8, 10, 12, and 15-day exponentially calculated moving average. Strong trends are supported by the long-term investors. These are the true gamblers in the market because they tend to have the great deal of the faith of their analysis. The indicator takes more time to recognize the change of the trend. We track the investors' activity by the using 30, 35, 40, 45, 50, and the 60-day exponentially calculated moving average. So GMMA attempts to identify trends by the combining two groups of the moving average with the different time period. The long-term AMA's exponential moving average represents the interest and behaviors of the investors that have taken a long time approach to the given market. The short time EMA presents the traders, the speculators who are attempting to calculate short-term profits. The relationship within each of these groups tell us when there is agreement on the value, when they are close together, and when there is disagreement on the value, when they are well spaced apart. The relationship between the two groups tell the traders about the strength of the market actions. The change in price directions that is well supported by both short and long-term investment signals a strong trading opportunity. Guppy is the easy indicator that will allow anyone to determine the overall Guppy is an easy indicator that will allow anyone to determine the overall trend of the market quickly and without personal basis. Of course, once you know to the general direction of the trending market, the odds of the successful trade increase. The GMMA also offers insight into the potential reversal or potential of the consolidations by the signaling the change in the market's sentiment. Although Guppy is the standard loan trading strategy, I have found the great results combining Guppy with the price actions, but we will talk about this later. So, how to read the GMMA? The Guppy Multiple Moving Average can be used to identify change in the trends or determine the strength of the current trend. The degree of the separation between the short and the long-term moving average can be used as an indicator of the trend strength. If there is the wide separations, then the prevalence trend is strong. Narrow separations are the ones that are the cross-correlation indicators or a weakness trend or the period of the consolidations. The crossover of the short and the long-term moving average personalized trend reserved. If the short-term crossing above the long-term moving average, then the bullish reversal has occurred. If the short-term mass cross below the longer-term ones, then the bearish reversal is occurring. When both groups mass are moving horizontally or the smoothly moving slightly and heavily increased, it means the asset lacks of the price trend and therefore may not be a good candidate for the trends trades. There's periods may be good for the range trading. The indicator can be also used for the trade signals. So when the short-term groups pass above the long-term groups of the mass, the market is bullish. When the short-term groups passed below the long-term groups, the market is bearish. These signals should be avoided when the price and the mass are moving sideways. Following consolidations period, to pay attention to the crossover and the separations. When the lines start to separate, this often means the breakout from the consolidations has occurred and a new trend could be underway. During the strong uptrend, when the short-term mass back towards the long-term mass, but don't cross and then start to move back to upside. This is another opportunity to enter into a long trade into the trending directions. The same concept applies to the downtrend for the entire short traders. The green moving average represents short-term trades and red represents long-term trades. When both the red and the green lines are moving in the agreement, both trending up or down, we are given the confirmation of the market sentiment and trend. The moving average may also act as the support or the resistance. When the price finds support and levels, it might be a good time for the add positions if you see the future upside potential for, or you have space risk capital available. When price tests to red moving average zone, long-term traders will look to the buy more given their outlook is still bullish. The strength of the trend is determined by the distance between the red and the green moving average clusters. The distance, the greater the trend. Another way to evaluate the strength of the trend is to evaluate the spread between each moving average cluster. If the long-term red average the spread at nicely, this indicates that support and resistance level is broad and strong. If the lines within the cluster are narrowing, this indicator's movement is declining and reserve all the consolidations could found. Just like the simple moving average, you can use crossovers as entry to exit signals. When the short-term moving average cluster consolidation over a long term, this signals the change in the market sentiment and suggests that the short-term trades are starting the new trend. For instance, the Guppy crossover indicators that short-term traders are become optimistic about this pair and could potentially start a new bullish trend. The strength of the trend is determined by the distance between the red and the green moving average clusters. Like I said before, the farther the distance, the greater the trend. Now, if you follow my previous videos on the moving average, you probably know that I am not the bigger fan of the moving average crossovers, since the GMMA indicators was designed to the trending assets. This moving average runs into the problems when the price consolidates. The indicator shows the consolidations and potential reserve when the short and the long-term moving average consult. The main limits of the group indicators is the lagging factor. Each GMMA represents the average price from the past. It does not predict the future. Waiting for the average to cross can at time mean an entry or exit that is far too late. As the price has already moved aggressively, all moving average are also approved to the whipsaws. This is when there the crossover potential resulting in a trade, but the price doesn't move as they expect, and then the average crossing again, resulting in the loss. So in times of the consolidation with the multiple crossovers, I find it useful to combine price actions with GMMA. You could also use Guppy Multiple Moving Average in the conjunction with the over technical indicators to maximize your trading odds. For example, you might look for the relative strength index to confirm or add trend, or look at various chart potential to determine either entry or exit point after GMA crossover. From my experience, the GMA is also the useful for breakout trading when the price is moving outside of the defined support and resistance level with the increase in volume. A breakout trade enters the long position after the price breaks above the resistance, or enter a short position after the price breaks below support. The recent breakouts are such an important trading strategy because these setups are the strange starting point for the future volatility increase, large price swings, and the many circumstances. Major price trends breakouts occurred in all types of the market evolves. Typically, the most explosive price movements are the result of the chance of breakouts and price patterns breakouts. So, when there is lost this separation between the GMMA, this helps confirm the price trend. In the current direction, so look for the agreement between the short-term and the long-term moving average, and pay attention to the chart formation such as the channels, triangles, and flags. Whatever you use internally with daily or weekly charts, the concepts are universal. You can apply this strategy to the day trading, swing trading, or any sort of trading. Once you support a clear trade setup in your desires some frames, remember to set the stop loss just above or below the short-term moving average, or if you want more room, describes your lot size of the place is below or above the longer term moving average. Although simple indicator that the GMMA can offer the variable insight as momentum or the slight trades. Guppy is the standard trading strategy. However, I have found the greatest return when combining Guppy with the price action, because the price action address periods of the consolidations when the Guppy trends upturn form. So always try to maximize your change to the great trade by confirming your basis with the other tools. If you learned something new and you found value, leave us a like to show your support, and don't forget to subscribe and hit the bell icon to stay in touch with the new uploads. Until next time.